Hey, good morning, small business owners. Welcome to Monday Morning Metrics. My name is Rebecca Bernick. I am the founder and CEO of Office Heads. We are a financial management company located in Evanston, Illinois, and we help small businesses figure out how to understand the story that their numbers tell and to use that information to strategically guide and grow their businesses. So every morning on a Monday at 10:30 Central, I jump on Facebook Live and I talk about something financial, something business ops, something small business. So thank you for joining me today. Today we are going to talk about how to calculate a savings plan. So if you've been listening to anything that Office Heads does, our Monday Morning Metrics or our track map, we talk about 4 things that somebody does when with their profit. Now here we are in April and we just finished up our first quarter. So whatever your profit is, we like to guide people to say, okay, there are 4 things that you can do with that profit. 1 is make a profit distribution to you, the shareholder, or other shareholders that you have. 2 is to pay down some debt. 3, reinvest into your company if you need some funds to grow. And 4 is to make sure that you have enough savings for a rainy day, to plan for a rainy day. Now, I always say you should, best practice is 3 times operating expenses. But I don't know, just in case you don't know what that means or how to calculate that, we're going to take an example here and I'll show you how we figure out what your minimum bank balance should be, your savings goal, and how to do a quick cash flow. So we're going to look at both QuickBooks and Excel, and I'm going to use the technology I have at hand and share my screen. And funny enough, I just, as I was practicing, it logged out. So hold on 1 second while I go in here, because the first thing that I want to do is let me do this. Let's go to QuickBooks. This is the first thing you're going to do. I mean, bookkeeping is important and great, but the best part of it is you have a lot of wonderful financial information located in your QuickBooks. Now, this is a sample file, so don't look at the numbers or the data. We're just going to walk through how to click through to get a really good template in order to do some calculations to figure out what your savings goal should be and what your minimum savings should be. So the first thing we want to do is we want to export a report, a profit and loss report. And we want to export that. Well, hello, look at that. Hold on, bear with me. Okay, hold on 1 second, because I'm going to go over here because I need to jump in here. I was practicing in the morning and it popped me out. So hold on just 1 second. I'm going to go to that sample company again. And now, thank you for your patience. We're going to go to the sample company. So again, the first thing that we want to do is to export a report. So we're going to go here to reports. And the report that we want is a profit and loss statement. Now that profit and loss statement is going to tell me what my profit and loss is. And that's a really great number to use because that's the numbers that you want to figure out what you have at the end of the day. This is the profit, and that we can run a cash flow analysis on that. So I'm going to scroll up a little bit. And for our purposes here, we're going to do last year because I'd like to get a really good 12-month last year by month. And I want it to be cash, not accrual, because I want to know really what came in and what came out. So I'm going to run that report. Now, of course, this doesn't have a lot of data. It is a sample report. I'm going to quickly customize this as well and say, listen, I don't really want to have any cents in there to make it easy. And then I'm going to click this little icon here to export it to Excel. And what that does is it exports it, and you should be able to open that up from either your downloads document or maybe it will pop up automatically. So what I did was I then took so there you go, there you have your report. But I'm going to let this one go down because this one doesn't have the information. On the side, I exported some information from a file that actually has data because it would be much easier when you're creating a model to see what the actual data looks like. So we're going to go back to our report and I'm going to scroll all the way down. Well, actually, why don't I start up? Just to go through the pieces of of a profit and loss statement, first you have your income. That's the money that's coming in. Then you have your cost of goods or cost of service, which is the money going out, and that is directly associated to the revenue. So if you're a service business, this is probably your direct labor. If you're making widgets, it is the actual bits and pieces of your widget that you're purchasing to make those widgets. And then we have operating expenses. So then I'm gonna scroll all the way down, and then we have our net income. The net income is profit and loss. So here, let's give a bigger screen. The next is profit and loss. So the first thing I'm going to do here is I'm gonna enter a bank balance. You're gonna find your bank balance on your balance sheet. And let's say for this instance, and so here we are, this is last year, January through December. So we want to take a look at what your bank balance is as of December 31st of the previous year, because we're going to do a cash flow. And the cash flow analysis is what do you have in the bank now, what's coming in and what's going out, and what does that look like? So let's say for our purposes, at the end of the year, I had $25,000 in the bank. So the next thing I'm going to do is I'm going to calculate the actual cash flow. And that cash flow is whatever I have in the bank plus or minus what my profit or loss is. And then for February, I'm going to say, well, what did I have in the bank last time plus the end of February? And I'm going to copy and paste all the way down to the end of December. And then you can see if I double click here, that's also saying, well, what is this bank balance plus or minus what I have in the bank after my profit and loss for that month? So this here is your cash flow. Now next, I'm going to say, well, what should my savings goal be? My savings goal is 3 times operating expenses. Now, you can do this a couple of different ways. You can go in and take a look at a 3-month snippet and say, well, what is my average? You could go in and just pick a month that's high because you want to be conservative. But for our purposes here, we're going to run an average of what those 12 months are. So I'm going to type in an equal sign, which is the, it says I'm going to create a function, average, and then I'm going to come up and look at what my total expenses are. I'm going to say, what's my average total expenses for that 12-month period of time? And it says it was $23,751. I'm going to just say equals over here, and I'm going to copy and paste that equals there. So it really is the same all the way through because I don't really intend to go up or low. It's just going to be the same. And last, minimum bank balance. Well, what we like to say and this is really just a simplistic way of looking at this. We like to say if your savings is 3 times operating expenses, monthly operating expenses, then your minimum bank balance should be half of 1 month. Because the way that we look at this is you're doing your bookkeeping every other week, or maybe the 10th or the 24th, you're doing your bookkeeping twice a month. So if there's 12 months in a year, that's 26 times you're looking at your books, you're paying your bills 26 times, you're doing your bookkeeping 26 times. So we think that if you take a month, you take a year divided by 26 months, that's about half of a month of what your operating expenses is. And so saying it this way is you should always strive to at least have that much money in the bank, because then your money's coming in, your money's going out. But if you have that much, which is half of what your typical expenses are, you won't dip below zero, typically. So you should always still be looking at your balances, but you won't be dipping below zero if it's half of that amount. So if you go back to our spreadsheet here, I'm actually going to take that amount and divide it by 6. That is what that amount is. So if I take that and say divide it, so if I take that and multiply it by 6, it's the same amount. That's what 3 months are. And then I'm going to do equals that, because we want it to be the same for every month. So now we have information, which is what my bank balance is at the beginning of the period, according to what last year's was. And you can use this with your budget, which is going to be great. If you did your budget or your forecast, then you can say, well, what do I think is going to happen in the future? And then you have your savings goal and your minimum. Now, what I like to do is to grab this and make a visual out of it. So I'm going to insert a chart, a line chart. So if you take a look at our numbers here, our minimum is 6,000. Our goal is 23. And actually, you know what? I did that wrong, because this 23 is actually the average. we want to multiply that times 3 because it's 3 months of operating expenses. So we did the average of the entire year multiplied by 3 months. This makes a little bit better sense. That looked a little good, like, wow, that company is making lots of savings money. So here we go. This is, and I'll do a little quick here on how we want to format. We want to actually select the data, edit, and go up to our January through December, and that will give us a good horizontal axis. And scroll back down, and here's your visual savings. So what this shows is you have a minimum bank balance, and if you had $25,000 in the bank, you already are above that minimum bank balance. And throughout the year, if you make your numbers, your savings is going to go up and up and up. And somewhere around June, you will have enough money in the bank to be able to hit that minimum amount. Now, let's change these numbers just slightly. So let's say you only have $10,000 in the bank. You see how that changes? So you start a little bit below. That's a cash flow thing you should be a little bit aware of, making sure that you have enough money in the bank, be a little bit more cautious on paying your bills. And then you're looking pretty good, and actually very good, because now you have above your savings goal at the end of the year. So that, my friends, is how we do a quick and dirty calculation of minimum savings goal, and what your cash flow is for a specific period of time. Now I'm going to go back one more time and talk about this, because if you have a budget by month, you could do the same calculation to say, okay, if I have 10 grand in the bank right now, and I intend to increase revenue as I planned on my budget, I got my cost of goods and cost of service going out, I'm operating the way I'm going to operate, I have to hire someone, I might be moving to a new location, and you know what that planned net income is. You run one of these models that shows, if I make my numbers, will I be above my minimum and I won't have to be nervous about any cash flow issues? And when will I be hitting my ultimate savings goal? Also, we have a 14-day cash flow model that is available. We've got a couple new blogs out in the month of April, and one of them has a link to our 14-day cash flow. So it's similar to this, but it's a little bit more on in 14 days. What's your bank balance? What bills do you think you need to get? What bills do you think you're going to have to pay? What is your operating expenses? And it will show you in the next 14 days how much money you have, and can you pay all of your bills. So go take a look at some of our blogs at officeheads.com and download that 14-day cash flow. It's a nice fun little model to be able to mess with your numbers. So thank you so much for joining me today. A little bit of tutorial how to have a savings plan. If you have any questions, please use the comment section below. We always love to hear from you, the small business owner, and we'll love to cover topics that work for you at the time that you're asking the questions. In the meantime, please join us at future Monday Morning Metrics. Go to our YouTube channel, which has all of our past Monday Morning Metrics. And in the meantime, have a great and profitable week.